Hello and welcome to Stocks Down Under. My name is Stuart Roberts and I'm one of the co-founders of our firm. And joining me today from Perth on the afternoon of Monday, the 22nd of May 2023, is Mr. Alex Rovira, who's the Managing Director of Brightstar Resources, ASX BTR. Alex, good afternoon.
Good afternoon, Stuart. Thanks for having me.
Now, I imagine after you finish from this call, you'll be breaking open the champagne because you've just about completed the merger with Kingwest Resources. That's a transaction that you announced last December. And obviously, these things generally take more than a few weeks to get done. You've had this transaction that worked for the best part of 6 months, and the Kingwest assets are now almost yours.
That is correct. Yeah, it's certainly been a long process. Look, it's had its ups and downs, but the shareholders approved that 2 weeks ago. We had the second court hearing last week, which approved it. So the court orders went out and the implementation date's this Friday. So post this Friday, it all wraps up. We'll be one entity. We'll have nearly 1 million ounces between, in the large group. And yeah, pretty excited to get on with building some gold mines.
Right. A lot of things to like about the merged group. Let's start with the assets that you bring to the table. Up near Laverton, you've got a mill which is surrounded by about 3 or 4 deposits. The main one of which is Corktree Well, which is your half of the roughly 1 million or so in resource ounces that we bring to the table. But it's that mill that's particularly important. If we were to build a mill like that from scratch, your friends at GR Engineering estimate that it might set you back something like $70 million for 500,000 tonnes per annum of capability. Am I reading it correctly?
Yeah, that's correct. That's probably a good ballpark, and I suppose that number specifically would come from some of our peer groups that have recently either built mines or released studies. So I think that the best reference point there would be the Musgrave Minerals pre-feasibility study. That I think there was a 500,000 tonne per annum mill and was circa a $70 million capex tagline just for the plant itself. And there's a number of other examples in terms of the recent mines that have been built in WA. But I think that's a fair comment in terms of the cost for a new one. Yeah.
Your consultants have looked at your mill. They reckon it's in pretty good shape. So you just need to do a bit of maintenance capex around the edges. And obviously, the numbers need to be worked out. It's a heck of a lot less than 70 million by the looks of it.
That's correct. And look, that's a key kind of selling point for this merger and for this company specifically. I mean, Como Engineering did that report into the plant refurb around about 2 years ago. They priced it at $5.5 million as a capital cost. Look, it's certainly a lot closer to 5 than it is 70 for a brand new one. So for us, when I look at the sector and the greenfields developers and our peer groups, the necessity to raise significant quantums of money is not there for us. So the ability and the hurdle rate to get into production is much lower. Right.
So you've got your 500,000 ounces or so in 4 deposits, the key of which is Corktree Hill, and you've got the plant. Down the road with Kingwest at Menzies, the people who run Kingwest have basically consolidated most of the Menzies field for the first time in living memory. You've got to go back to when Queen Victoria was on the throne, before Menzies was in one pair of hands. That might be an exaggeration, but basically we've been waiting a long time, those of us who know Menzies, for this kind of situation to emerge.
Absolutely. I mean, Menzies is a super high grade historic goldfield. It's mined 800,000 ounces at 19 grams per tonne, since the late 1800s. So it is a well-renowned storied goldfield, mined 800,000 ounces, currently a 500,000 ounce resource. So it's at least a 1.3 million ounce endowment field, and we think there's a lot more to go in that.
Right. And it's fair to say underexplored in recent years as well, but that's something you intend to correct.
Absolutely. Yeah, I think going into it with the right frame of mind and the right mindset, looking for margin and looking for grade, because that's ultimately what's going to support production opportunities.
Right. The merger valued you using your stock compared to the others. The transaction value was about $18 per resource ounce. That is what it is. But we've seen a pretty good environment for gold in the last couple of years as gold has bounced. Well, not a couple of years. Let's say 12 months as gold has bounced off the lows of 2021-22. What are you seeing once the market gets to appreciate the quality of the assets you've brought together? What's a more appropriate number in terms of for near-term developments in the Western Australian goldfields?
So from my perspective, I think our peer groups that we could readily quote would be trading at anywhere between $50 to $60 an ounce in the ground as a EV per ounce multiple. I think if you then look at, given the fact that we're in Western Australia, all our resources are on mining leases. we've got a processing plant there in care and maintenance, so we've got a path to actually monetizing these assets. I think we should be trading it much higher than that $50 to $60 per ounce.
It's not anywhere in Western Australia. We're talking in the same neighbourhood as Granny Smith, Sunrise Dam, Gwalia, etc. You're in prime country there. Yeah. With some assets that I won't say have been overlooked, but it's been where a lot of new gold has been discovered in recent years, and a lot of gold will still be discovered.
Absolutely, yeah, correct. You're in the part of the world there you get some pretty significant deposits. So for us, it's really just trying to tap into that exploration upside and grow something.
So talk to me about what's on your agenda post next Friday when the merger formally completes. What do you hope to spend the next 6 months doing up till Christmas?
So racing through a scoping study and a pre-feasibility study and exploration. So we've got pretty ambitious exploration programs, both at Laverton and Menzies. We can see pretty significant exploration upside. I'd love to be able to take that resource from just shy of 1 million ounces now to something much higher than that. And I think that underpins restart scenarios. But similarly, at the same time, yeah, as I said, going through a scoping study and a pre-feas, I think we need to be going to the market, showing everyone rough level production profiles, all in sustaining costs, capex, opex, that kind of thing. So that way the market can actually value appropriately. Okay.
And coming into 2024, is it too early to say that this would be the year of the restart in 24?
No, quite possibly. Yeah, it's certainly something that aspirationally we're looking at doing in terms of the timeline. As I said, everything's on mining leases, so the permitting and the approvals process is well known and something that could be achievable. The refurbishment of the plant and the potential expansion of the plant is something that could be achievable in that timeline. So really, it's just about drilling out the deposits, declaring reserves as a part of the studies, and looking at how you finance it. And as I said, the ability to finance this is significantly greater than potentially some of our peers, simply because the capex is so low.
Many investors won't have met you. This is your first foray into corporate land. Up until now, it's been a few years at Patterson's moving into Canaccord, and before that UWA studying geology and then Hale School. So what motivated the big jump out of Canaccord into corporate land?
Look, it's a very good question. Something I do get asked frequently. So there was nearly 10 years in investment banking and corporate finance at Patterson's and Canaccord, and geology by background. Look, I knew these assets really well, and I saw the opportunity to go in there and assist the existing teams and help build a team in place. Look, we've brought in a few key hires, people that can come in and actually have experience doing feasibility studies, building gold mines, getting things permitted. I think that the opportunity to go in and join the team and help create value is something that I actually look forward to doing. Yeah, it was for me, it was a personal opportunity to roll the sleeves up, I suppose, and get in the trenches and try and build something.
Right. And talk to us about some of the people that are joining you. I see you've got Greg Bitter coming across from the Kingwest side to grow with you on the board. Many folks on the East Coast will know him. Tell us about some of the other players you've got.
Yeah, so we've got John O'Downs as well on the board as a non-exec director. So geologist by background. He's the managing director of Kaiser Reefs, which is a gold miner over in Victoria, ASX listed. So to have very experienced bankers, finance guys, a lawyer, and someone like Jono who's actually running a gold mine at the moment, there's some pretty good skill sets there from a board perspective. And then in terms of the operations teams, I've got a gentleman called Dean Valve who's joined as chief operating officer, ex-Calidus and a few other places, Minjar and things. So guys that have actually built mines, operated mines, done feasibility studies. We've got just hired a pretty key guy on the permitting and the approvals front. So really building up the ground roots team, I suppose, to people who've actually done this before.
Talk to us about the challenges you expect to run up against in that building up through the scoping study and the pre-feas. Nothing ever quite goes to plan as your investment banking experience would have shown you. What are you concerned about?
Oh, look, I think in the current market context, despite the gold price, it's access to capital and its interest levels in small cap explorers. I think the market is still really difficult. Unless you've got lithium or rare earths, it's still pretty tough out there. So
you must be crazy. You haven't put a single lithium or rare earths play into this company, Alex. What's wrong with you?
I know. I ask myself that all the time. Well, you'll note that we're actually only a few kilometres from Linus's Mount Weld deposit. So right. I have no doubt we'd have some rare earth bearing clays on our ground. So I could always wheel out the air core or the auger rig and claim a rare earth discovery. But no, we're ultra focused on building a gold mine here. So that's certainly the playbook. In terms of overall risks, I think access to people is a tough one in the current market, and certainly the cost environment for building a gold mine and operating a mine. So I think at the moment we're well insulated from that just by virtue of where we are in that development cycle. But as we go towards refurbishing a mill, getting back into production, that's when some of those the widely spoken about inflationary pressures and labour pressures in the market probably start to come home a bit.
Right, and obviously that's not going to change overnight, because we spent 2 years of Western Australia being the hermit kingdom. All that labour that couldn't get into the state is yet to come in a serious way.
Absolutely, yeah. Look, I think it's certainly abating somewhat, is when you kind of talk to some of the guys in that mining space, and you see it in the recent round of quarterlies. But yeah, it's certainly something that's, I think most management teams you'll find of operating mines or developers are ultra conscious of.
Right. Well, Alex Rovira, well done on almost completing the Brightstar Kingwest merger. Well done on you taking a risk in this company, and I hope it pays off in a serious way for you. We'll keep track on you as you progress.
Appreciate it. Thanks a lot for your time, Stuart.